Cool, we're back with another market open live stream. Uh, Take a look at the charts today. We're gonna do our usual pre-market analysis. Let's start off the day. Should be a good day in the markets today. I'm not 100% convinced that we're gonna continue going down today, but there is a chance that we do continue to crash. We haven't yet shifted market structure to the downside, and so it's going to be interesting to see what happens today. When we do our pre-market analysis, we should have a more clear guidance on how to approach the market today. But if I'm completely honest, I'm not completely sure. I'm not completely convinced on the direction of the market. However, we will start with our pre-market analysis. Let's just grab our give me one moment actually. Share the link. Alright, so what we're going to do today, we're going to start off with our pre-market analysis. Let's grab our market template so we know exactly what we're approaching the market with today. If I'm not mistaken, should be pretty straightforward. If you're new here, okay, so we are seeing somewhat of a decline in pre-market, which is probably indicating to me that if this level gets broken, we are probably going to continue an aggressive decline today. The reason why I'm not convinced on the direction of the market is two reasons. The first reason is, although we've had quite big moves down, we're still in an uptrend technically, as we haven't actually closed below this level, and so this is the main level to watch out for. You want to see price close below here today, and so if we do clear our Asian session liquidity, which is here, if we do clear this level out, we're going to want to see if we get a close below here. If we get a close below here, then we are likely to continue aggressively down. However, this is still a fair value gap, and so if we do come down aggressively, it might just provide us with an opportunity to buy the market back up, and so that's why I'm not convinced in the downtrend as of yet. We need to give it one more day to confirm the close, at least a day. Oh, fuck, man, I'm knackered. Alright, so let's make a start on our pre-market analysis. I'm just going to get rid of some lines just to clean up the chart a bit. What happened there? Just going to get rid of some lines just to clean up the chart a bit. This is still external liquidity. This can go. This can go as well. This can go. Liquidity there. Alright, so we are in a bullish bias. As I said already, the market is still in a technical uptrend. And the reason why that is because we made a higher high here, and so this could just be a pullback, a very deep pullback to continue the rally higher. And so we can't commit to any sell trades at the moment. What we do want to see, however, what is this white line? I guess this line can go as well. So this is our validation level. So if we take a look for the week, we've got news on Thursday, on Friday. No, we do have news on Thursday, if I'm not mistaken. We got NFP on Thursday. And so we still want to see what happens. I'm not quite sure what's going on with Forex Factory. Right, let's see if that helps. I'm guessing Forex Factory is down. Not exactly sure why. Alright, so we are still bullish and we're going to be targeting external highs. External liquidity has not yet been taken. If I'm not mistaken, we have external liquidity. It got taken up here. External liquidity got taken up here. And so if it did get taken in this session, we'd be able to target these lows right here. However, we're not going to commit to that trade out of the session. And so going into the session, we're going to want to watch this level to buy, to try and buy the market up from. This is going to potentially be our buy trade. However, it's not great that we've closed below this level. That's not great. If you take a look at the weekly chart, we gapped up here, we closed down below it, then we swept liquidity at the high to come back down. And so that could potentially indicate further downward movement, which would look like this coming to engulf this market, and that would probably confirm our crash for the month of November. And if we do have a crash and then we get closes below to engulf the monthly candle, that could be indication of an aggressive decline over the next, I want to say the next quarter, which isn't looking great for markets. So there is a chance we do get a draw of liquidity, a draw on liquidity down to this level here, and that could be what propels price down. And so we'd want to watch. You want to watch the chart today and potentially not trade today if we don't get a sweep of liquidity prior to the session. If we get a sweep prior to the session, then going into the session we could be able to short the market down. That would indicate we close below the gap, which is a good sign of further decline. It would also indicate that price is targeting our invalidation low of the uptrend. And once the uptrend gets invalidated, that confirms the double top. This top and this top neckline right here, double top gets confirmed, as well as price going down to target previous day's lows. And so we could potentially target the previous day's lows today before we get a rally. But we want to see that happen pre-market instead of in the session, because anything that happens in the session would just be indicative of a rally. And so we're starting to see some aggressive movement down into this level now. Part of me wants to sit the day out because I don't want to be caught on the wrong side of the market. Okay, so this is pretty good. Seeing it looks like a slight engineering of liquidity taking place by institutions. We'd want to see that continue to occur. Let's carry on with this pre-market analysis. Alright, so we've got this gap right here, which was we've got this gap. We've also got this gap down here. And I've marked out all the bearish gaps. As we're still in the bull market, the bullish gaps, sorry, not bearish gaps, I'm talking about the bullish gaps. All of these bullish gaps are what's important. And so because we gap down today, if price rallies back up above this gap, that's extremely bullish. And that would mean we'd be targeting this external high. And so this could just be preparation for the market to go up, and we're not going to commit to any upward momentum until we get a close below and a confirmation of the decline. And so we'll also make a note of that. Important levels of internal liquidity. So let's take a look and find our Asian session low. So this is our Asian session low. And because we've taken Asian session, we don't have a London session low. We've also marked out our previous day's low, which is down here, and that could be a target as well. So our previous day's low is also going to be a target. What's good about this market is so we're seeing liquidity build up. So this is all liquidity. When we have a trend line like this is all liquidity. And so this is indicating to me that we're actually about to have a massive short squeeze to the upside as everyone's positioning short. Um, as everyone's positioning short, we could potentially squeeze higher. Um, and that's only gonna occur if we get the right market conditions today. That's a bit of a weird thing I've done with my arm, but whatever. So the hourly and the 4 hour chart. So at the moment, the hourly chart is, we're trading in a slight wedge pattern. And because we're trading in a wedge, I don't want to commit to one calling, although it does look like a slight downtrend. This downtrend could be an attempt to target liquidity here and here, and so we're not going to commit to that. I will mark it down now. So that hourly chart. All right, so we still have a bullish bias going into the session. We've got 30 minutes until the market opens, and so what we're going to expect to see, if I'm not mistaken, we're going to want to see price come down, bounce off, hopefully sweep liquidity, and hopefully bounce off this order block. And this should be our opportunity to find a catalyst in price right off this level. So this would reject our invalidation zone on the daily chart, and then we should see a massive rally into liquidity. And so that's going to look something like this, a rally up, and then we should see price begin to target our external highs again and re-continue the uptrend. That is my base case belief for the session, and so I'll make a note of that in a second. But the main reason for that is I believe we're going to get a short squeeze today, and when we get that short squeeze we should see a massive rally in an attempt to target our external highs again. And so there's really no reason to be bearish at this moment in time. The risk to reward in regards to potential reversal trades has pretty much been exhausted, and so I wouldn't want to commit to a bearish trade from this moment in time. As I said, our bearish trade risk to reward would literally be a trade from here targeting here, and as you can see, the risk to reward for this trade, if we risk 100 points, the risk to reward is actually minus, is negative, and so we can't take a reversal trade from where we're currently positioned. And so that's why I believe that we're going to see a squeeze today. If going into the session we get price to come down to here, we should see it. We should see a lot of buyers come in and push price higher. And so one more thing I'm going to do, actually, I'm going to make a note of where our previous week's low is. Oh, so our previous week's low actually corresponds with our previous day's low. Alright, that's good to know. What's kind of interesting, however, Forex Factory is not working, which is weird. I don't know why this website's down, because I do need to know what's going on for the day, for the week, sorry. But if I'm not mistaken, NFP comes out on Thursday, and so because it comes out on Thursday, I would prefer to be positioned after NFP, and so maybe we might see a bit of choppiness into NFP, and that could be a reason to not particularly get long at the moment. So let's make a note of what we're doing going into the session. So we're waiting a sweep on liquidity to the low side. Waiting a sweep on liquidity to the low side. There's a chance we just continue going down and targeting our previous day and previous week's lows. That's because this is internal liquidity, and there's a chance price might want to target internal liquidity. But my belief is this order block right here should be our opportunity to buy the market up. And so what I'm going to want to see is price sweep liquidity to the downside right here, sweep here, and bounce off this order block and then begin an aggressive rally. That's what I want to see in today's session. And so we'll make a note of that really quick. So we'll go bold for this. So going into the session, we want to see the sweep of Asian session lows followed by a huge rally after bouncing off of our 15-minute order block. This should confirm further bullish momentum to initiate a short squeeze into our trend line. Liquidity. This liquidity should be catalyst for reversal, not reversal, for the reignition of the bullish trend. Alright, so just to be clear, I said going into the session we want to see a sweep of Asian session lows followed by a huge rally after bouncing off of our 15-minute order block. This should confirm bullish momentum to initiate a short squeeze into our trendline liquidity. This liquidity should be the catalyst for the reignition of the bullish trend. And so what I mean by that is right here we have our Asian session low. This is our Asian session low. And so we want to see this level get taken. If we take a look, we saw price actually approach it, but we didn't sweep it. This is what we call engineering. That's what we call engineering of price. And so when we see price get engineered like that, it somewhat supports our thesis. And so what I want to see is I want to see price, on a 15-minute chart at the moment, I want to see price come down to sweep it. And I want to see a massive bounce here. And then we want to see the trend reignite. And we want to see a target of the liquidity resting at these levels. And this is where it starts getting pretty nice, because when we see this take place, this should be the momentum that we're looking for to reignite the trend. The only issue we have is that the hourly chart is still printing downward, in a downward direction. However, we want to see a breaker, and so what we want to see is we want to see price sweep down and then shoot up, and that's the most ideal situation. Let me actually start recording. Alright, so we just completed our pre-market analysis. I'm going to go over it. The market's going to open in the next 20 minutes. And so we're just going to talk about what we're expecting to see in the markets today. And so this is the US30 chart. We've got a bullish bias on the daily chart. We're still in a bullish trend, even though we've seen a sweep of liquidity at external liquidity up here. We're still in a technical bullish market type, and so we still have to continue looking for bullish trades. We've seen external liquidity get taken. In that position, in that potential situation, we could see a trade targeting internal liquidity, which is our previous session lows. However, that's not on the cards today, for the simple risk that our Asian session lows, or our internal liquidity, is right here. And so if we have a standard stop loss of 100 in an attempt to target this level right here, you can see that it's a negative risk to reward 0.46, which is not good enough for us to actually take the trade. And so that's not on the cards today. We can't take a short position from where we currently are. Moving forward, so we know that this is not on the table today, so you can ignore the reversal condition. So we will continue to look for buy trades. How are we going to find a buy trade in the market today? The way we're going to do that is we're going to look for important levels where we could potentially position. And so we've got our important fair value gap. It's actually not a fair value gap, it's a opening gap. We saw this gap over here, and today we slightly opened down. And so when we open down in the gap, if that gap gets close to the upside, it reignites an uptrend. And so that's what we're going to look to see today. Going forward, keeping it moving relatively swiftly. Order flow is in confluence with the uptrend. The hourly chart is currently in a downward trend. However, because it is in consolidation pattern, wedge style zone, this could be a method to engineer liquidity above the trend line. And what I mean by that is, if we take a look at the hourly chart, the downtrend started from here, and so this downtrend could just be an attempt to come down and target our liquidity before we start the rally aggressively higher. And so because we're trading in a sort of a wedge style pattern, this is what we call a wedge. We've got liquidity down here, and we've got price trading to the top of the wedge down, Because we're trading in somewhat of a consolidation, we cannot put a lot of emphasis on the downtrend, because it could just be bouncing from the top of the wedge to the low of the wedge. And so moving forward, as I said, this could be a method to engineer liquidity above the trend line. And as I said, this is all liquidity being built up here, liquidity. All of this level is liquidity. I know this is liquidity because they're all spikes in price, and so people are positioning here, sellers are positioning here, selling. These are all sellers. All of these lot are sellers, and that means if they're being positioned there, that is just going to give us fuel to actually buy the market into their stop losses, and that could reignite the uptrend. And so that's what I mean when I say it could lead to a short squeeze, and that's the trade that we're looking for, and a massive rally into our external liquidity, which is all the way up here. And if you take a look, these are all gaps. And the reason why this is good is it means if we do have a reversal here, it's going to be perfect, and it's going to be a perfect opportunity to buy the market up, because we have no resistance, we have nothing to stop us from going higher. And so going forward, the 4-hour chart is also in a bearish overall trend. However, this could be to induce further selling into our Asian session low before price rallies aggressively into our trendline liquidity, which is what we spoke about in the hourly chart. And so going into the session, just going to make a note of this, just to be clear, put it in bold so you guys can understand it. But going into the session, we want to see a sweep of our Asian session lows. We want to see this level right here taken. And after we see a sweep of this level, we want to see a bounce off somewhere in here, followed by a green candle print. And if we see a bounce off our 15-minute order block, which is this level, which corresponds with our daily chart invalidation zone, we need price to close below here to confirm it's a downtrend. So if we get a bounce off that level, which corresponds directly with our 15-minute order block right here, we get a bounce off there after sweeping liquidity, we could see price rally aggressively, and that could be our candle that would be our entry signal or execution signal. And so this should confirm bullish momentum to initiate a short squeeze into our trendline liquidity, and then this liquidity should be the catalyst for the reignition of the bullish uptrend. And when I say that, what I mean is we are still in a bullish uptrend. This is just, in my opinion, this could just potentially be a way to shift sentiment to bearish before buyers get back in aggressively. And so that's what we're looking for going into the market open. We've got about 15 minutes till the market opens, and so we'll keep our eye on that You want to see this level get swept. We've already seen price engineer liquidity around this area, and so we're gonna want to see this area. We're gonna want to see price come down and sweep it. However, if we do continue to go down, that's not gonna be great. But if we go down and target our previous day's lows, um, that's just gonna be even more opportunity for us to buy. Excuse me, for us to buy at cheaper prices. And so yeah, we'll keep an eye on that. Let me just take a look really quickly. Okay, so we've got London session highs up here, but it's near a whole bunch of liquidity. All right, so yeah, that's what we're looking to see in this session. Um, we're not going to commit to any particular direction at this current moment in time, but what we do want to see is we want to see a sweep of liquidity at the lows, and so we'll keep watching to see what takes place. We've got about 13 minutes until the market opens. I'm just gonna pop to the loop quickly. That should be alright. Alright, so once again, I'm just going to go over our pre-market analysis. So we're anticipating, obviously it's a bullish bias, we want to target our external highs. Um, we've seen a reversal condition occur, however the risk to reward to our reversal condition is not great, and so we can't get into that position. If you take a look from where we're currently positioned, we can't get short 100 pips of risk to make 15 pips of profit. Doesn't make sense, and so we're not going to take any shorts today. We've identified that as a trending market, bullish trend. We know we're in an important fair value gap currently. We want to look for important levels of internal liquidity, and so we've identified previous session lows, which is our Asian session lows, hasn't yet been swept. We've also got our previous day's lows, my mistake, and that's down here. And so if price sweeps our previous session lows and breaks this level, we're going to target this level down here. But in the meantime, what we're expecting to see is this. But we want to see, going into the session, we want to see a sweep of our Asian session lows, followed by a huge rally after bouncing off our 15-minute order block, this level right here, which corresponds with our invalidation zone on the daily chart. And so the market remains in a bullish trend until we break and close below this level. And so if we do see a decline, even to target our previous day's lows below this level, we could potentially just have an opportunity to buy the market at even lower price after sweeping this level of liquidity down here. However, going into the session, in the last minute, I'm going to say we want to see a massive rally after sweeping our Asian session low, and this should be a bounce off our order block, and then we should see a short squeeze today, and that short squeeze should provide us with the opportunity to sweep out all the people who are positioned long right here, and then all these sellers, all of these sellers should provide us with the liquidity to see price go higher, much higher again. And so the session has just started. We'll see what happens. As I said, we want to see this get targeted. We're going to keep our eye on that and wait for an execution to provide us wait to execute. And so we're going to wait. Okay, so just to be clear, we always wait for a candle close to be to confirm the direction of the market. And so we have swept our Asian session low, which is great. However, we need to see this candle close green, and that's 12 minutes away. Um, Anything that takes place within the 12 minutes is all noise, and we want to see an actual, we want to see the price action actually indicate to us that we're going higher by closing. And so even now, as prices wicked all the way up, this could still all be noise, as price could potentially continue going lower. That's why we want the data to be the indication of price going higher, and not just the volatility that occurs within the 12 minutes that we're waiting for the data. And this is where traders get caught out. They're not patient enough to wait for the data. And so at this current moment in time, I'm just going to sit on my hands and continue to wait. We've got about 11 minutes left, and so we'll see what happens. This is where discipline really becomes an important factor in trading, because when you start to see stuff like this occur, it really makes me want to try and get positioned. And so I'm gonna wait. Yeah, it's not great. Seems like we're missing the opportunity, but I'm still gonna wait. Alright, price is starting to leave us, but the optimal position will always be at the data, be on the data, be at the close candle, the data closing candle. And so it does look like a great green candle, and it does look like everything we predicted is about to take place. But I'm not sure I want to get in yet, because we could see a rejection off the top of this candle, this gap, and then price just come down aggressively. And so I'd rather just wait for the data to confirm it. We've got about 8 more minutes until the candle closes. And that 8 minutes should be quite busy for us. Yeah, we've got multiple candles engulfed at this current moment in time, and so it does look like we are about to go higher aggressively. Um, However, just remaining disciplined to the plan, I'm still gonna wait until the candle closes. But we are getting what we was looking for. We are getting the breaker candle. If I'm not mistaken, we are getting a breaker. And so if you take a look at the 4 hour, everything should now begin to shift into an upward trend, and that should be what catapults us into our bullish momentum. And so yeah, um, I really want to get positioned, but this could be the rejection that usually would take place right here. You got a few more minutes until the candle closes. Got about 5 more minutes, 6 minutes. Um, the risk to reward on this trade is amazing, and for that reason, there's not really any reason to rush into it, and that's why I'm waiting for the data. I'd rather wait for the data because, as you can see, the upside target is all the way up here, and that's over 1,000 points away. And so there isn't really a reason to rush into getting positioned. However, we do have the final 5 minutes of the candle approaching, and that's probably when we're going to get the most bullishness come in if we are truly about to rally. Alright, so this last 5 minutes, I'm expecting sellers to come in. If they want to push price back down, I'm expecting sellers to come in now, because the last 5 minutes is usually where we see the most, where we see institutions play their hand, especially after the open of the open of the New York session. And so we want to see whether or not institutions do push price back down. And this is why it's important to wait until the first 15-minute candle is closed, because after the first 15 minutes we were able to tell where the market's going. And so if institutions aren't able to push price back down or to reject off here, if they don't reject price back down into the zone and cause this to turn red, which is probably not going to happen at this point, then we are playing our cards right perfectly into this uptrend. So this is where we want to be positioned. And so I'm going to get ready to position long. And so we don't want to see price come back down into this zone below this level here. We don't want to see price go back down, because that would be indication of a sweep of our London session, liquidity in our London session, an indication of a rejection. And so this is why we wait. And so yes, this is why it's important to wait for the candle to close, because now in the last 2 minutes, if we do get a green candle close, where our position is going to be very, very important. And so if we close above here, if I position here for 100-point stop loss, this is a much better trade rather than positioning all the way up here. And this is still a good place to be positioned as we're inside a gap anyway. Let's look at the hourly chart. So it seems as if the hourly chart is actually rejecting off this level and it's not forming a breaker. We could form it on the next candle, which could also be good in an attempt to target liquidity. And so we're going to wait for the candle to close before we get executed. Still looking good though, still looking good. Still potential to go higher. However, what we don't want to see is we don't want to see price just completely just collapse, because if it does collapse, that means we're headed for this level of liquidity down here, our previous day's lows. So this wick is not great. We've got a minute and 25 seconds until the candle closes. We're starting to eat up some of that wick, which is always great as well. We've got a minute left. I'm going to get positioned in the last 30 seconds. As long as we don't print this, we don't give way back for this wick. I'm looking to get long again, so I don't want to see a massive wick to the upside. Okay. And so because we are seeing a little bit of a wick and we've seen multiple levels of liquidity inside be held, I'm not going to get positioned long just yet. I'm going to wait to see how the start of this candle plays out. Alright, I am getting long now. Okay, I am positioned with 100-point stop loss. Alright, so I'm positioned right on this candle, around here. 100-point stop loss is here. And you want to target all of this liquidity. And so we should see quite a big bullish move. Okay. Alright, so our overall targets for this trade is going to be up here. This is hopefully where we see a short squeeze. This is where our overall targets are going to be for this trade. However, we are going to take partials on the trade somewhere in this area, and so probably after a sweep of all of this liquidity here. And so from where we are, that's probably around a 3 hour trade, which isn't too bad. Um, yeah, we'll keep our eye on that. We're not seeing the momentum that we're looking for currently, which isn't always great. However, we want to see, for this hourly candle to close, we want to see a breaker. So we want to see some momentum coming before the end of the 15-minute candle closes, because that's when the hourly chart closes. And so if we don't get that, we might have to reduce some of the position. However, at this current moment in time, it doesn't look too bad. All right, so I want to see a bit of a short squeeze. Here, I want to see this start to pick up a bit of momentum as we approach the last 5 minutes of the candle. Um, I don't know. It doesn't look too strong at the moment, but the last 5 minutes should catapult us into momentum. 30 seconds left for the last 5 minutes. And yeah, it should start to pick up around now as everyone begins to anticipate the last 5 minutes. However, if sellers are truly in control, then it's not gonna matter then, is it? But my belief is, obviously, as we approach the close of the hour, my belief is that we do get our breaker candle, and so I want to see this pick up quite aggressively now. It does seem like we do still have quite a bit of selling pressure, but the close of the candle is always where the data is in it. So it doesn't really matter what takes place approaching it, and that's why we have our stop loss in place. Um, and so yeah, we'll keep an eye on this. Yeah, it doesn't look great, unfortunately.